Hello, welcome. Thank you for downloading our Make It Rain income calculator. As an accountant and small business advisor, the most common thing that I see is businesses fall into cash flow problems. So, if you've read the book Profits First by Mike Michalowicz, this concept won't be new to you. And if you've not read it, I would absolutely encourage you to do so. So I've built a calculator for you to show you what I do in my own business every single week to help ease the burden of the cash flow issues. So what I want you to do is, if you are using a Xero file, I want you to open up your last year's profit and loss. And I'm a big believer in last year always telling a story about what the potential is for this year. So I'll give you a quick little glance of the calculator. So I've put this in here for you, and what it's going to do is basically we'll have some multiple bank accounts. And for me, I have got a dedicated income bank account for my business. And based on whatever's in that business bank account is where I put my money based on what the use of that money is for. So I'll come back to that. But what I want to show you today is how to actually find these percentages so you know what you should be putting away. Now, this is just the demo Xero file. So if you go and choose last year's profit and loss, this one's looking very, very lean, but we'll use it for this example anyway. So what you can do is actually click on this little more button in the corner and pop in there a percentage of trading. So if I hit update there, what that is going to do is give me percentages of what I spend based on the total revenue that I've made for the year. Okay, now this is a really great way, I guess, for you to know what kind of percentages, what kind of markups you should be doing on your products and services. So the first one that I'm going to look at is this wages and salaries. So of the $16,810, we have got $6,700 has been paid out as wages, and that equates to about 40%. So if I jump back into this calculator, I'll take these percentages out. But what I'm going to put in there is 40%. That one didn't take into account superannuation, but we will do that. You could, I guess add those together and use that as a percentage there. So if I jump back into my calculator, what we can see here is that our total operating expenses, so these are our overheads, totals 96%. So what that means, if we take the wages out of the equation, our overheads for this business, keeping in mind that we rounded that one up to 40, is going to be 56%. So if we have our overheads account, we'll pop in there our 50%. And then you've got your tax, your GST account as well. A big, I guess, problem that I see a lot of business owners get into is they leave the tax and the GST in their trading accounts, and then they use that money for their overheads or the cost of doing business. I would strongly encourage you not to do that. Because I'm always of the mindset of that if it's out of sight, it's out of mind. So if you can be removing that money from your business bank account and putting it into another account, and for you, if you're not diligent with putting that money away, it might be at a bank that's completely separate from where you do your normal trading. So that could be a way that if it's a case of, well, if it's out of sight, it's out of mind. Now, this one it will vary based on different businesses. It'll vary if you're a sole trader, if you're a company, if you're in a partnership, all of those types of things, whether you're registered for GST or not. If you are a sole trader, what I would encourage you to do is have a look at your notice of assessment from last year. see how much tax and superannuation that you paid, and then divide that by your total income to come up with that percentage there. So in this instance, this is very, very lean. So you can see from our wages and our overheads, we're already at 96%. So in this case, because this business isn't looking profitable at all, it might only be, there would be no tax payable in this case. So if that's not the case for you, you might pop in there 25%, your overheads might be only 30. Oh, hang on, let me take that out of there. 30, and we might be aiming for a profit of 5%. Whatever that looks like for you, if your business is running at a loss, you need to work out what you can do to either reduce your expenses or increase your income. Okay, so once we've got those percentages there, and again, use your zero file for this, it'll be the best determination as to what that looks like. What I do in my business is I have a bank account that all of my revenue, all of the income goes into there, okay? I generally transfer that balance out once a week. So every Friday morning, I'll jump onto my internet banking and see, well, how much money have you got in your business account? And then where do we need to put that? So let's just use $10,000 as an example here. So what this calculator will do will say, okay, I need to put $500 into my profit account. I need to put $2,500 into my GST account. I need to put $4,000 into my super, and I need to put $3,000 into my overheads. It's a really great way to distribute your income. And so that business bank account should always come back to nil at the end of every period that you do. Now, and obviously I'm a service-based business, I'm not a product-based business, but let's say you have product as well. So your wages might only be 20% and your purchases might be 20%. You're going to need money to restock. So you might change this account to a restock account. And then when you're doing your purchases, you would be paying your accounts out of that restock account. So you can change these based on whatever you call your bank accounts. And it's completely up to you. I've also added a cash reserves one in here as well. And the reason I've done this is, let's say you have done a product launch and it has gone gangbusters. And, let's say you've ended up with a $100,000 launch. Now, based on what your percentages are, it probably doesn't really make sense to have 30 grand sitting in your overheads account. So what you might do is go, okay, look, I know that my overheads aren't going to be $30,000. They're only going to be, we're going to, I guess, save some of that 100 grand. Let's say we're going to put in 20,000 into a cash reserve. So I'm a big fan of building buffer accounts, and general rule of thumb is anywhere between 6 and 12 months worth of running costs for your business. We've had a pandemic recently, and that was one of the big things that I saw is that businesses didn't have cash reserves. So if you've got those cash reserves and you're able to put some of that money into there, you can absolutely do so. So what this has done is gone, okay, well, of that 100 grand launch that I've just done, fantastic. I'm going to put $20,000 into our cash reserves. And then with the other 80,000, it's going to be split based on our percentages. I hope that is a good tool for you to be able to do. It's just a matter of finding out what those percentages are. And really saving that profit first and being diligent, I guess, with going, well, if I've only got, $24,000 in my overheads account, I have to make my business run only with that $24,000. So, or whatever that is for you. Anyway, happy playing. If you have any questions, comments, would like a little bit of help, you've got our details with that download, so feel free to reach out and let me know how you go. Thanks.